clearly big money is starting to move in, and big money is often the smartest money. And I think the big money is looking at this is important for everyone who's paying attention and watching and listening and interested in silver. Solar now requires 20% of all the silver supply every year, and solar is growing. The newer technologies that are becoming more mainstream within solar panels require more silver. So, I mean, worst case, I think, is that, let's say, solar panel production, even if it were to level off, which is possible, especially if we get some kind of important economic slowdown, it could, let's say, level off. But because we're shifting to new technologies, we're still going to require as much or more silver.
On today's market recap, the prices of precious metals reduced as silver tumbled over 2%, with gold, platinum, and palladium following suit by also trading lower. Spot silver retreated more than 3% on Monday as fears of a wider conflict in the Middle East eased while trimming demand for safe haven assets. Meanwhile, Chicago Federal Reserve President Austan Goolsbee said progress on reducing inflation had stalled this year, suggesting interest rates will have to be kept high for longer. Market players are now expecting the key US PCE inflation figures due to be released on Friday for more clues on the rate outlook. Annual core PCE inflation eased to 2.8% in February, or the lowest rate in almost 3 years, from 2.9% in January. Now we'll show you excerpts of the latest interview of Peter Krauth. Like, subscribe, and turn on notifications so you do not miss out the best clips of the most sought after commodity experts. Let's get into the episode.
It feels like, it really does feel like this is finally it. We've been patient for a long time. And if it were not for the outstanding, I'm going to say even tremendous move that we've seen in gold, I'd be a bit more tempered in terms of how I feel, the potential for silver at this point. But gold's been on fire. Silver has nearly doubled it. If you look back to, I think so if you look at from the start of the year, gold is up about 14%. Silver is up over 20%. And if you look at, I think from the beginning of March or end of February, gold's up about 15%, silver's up about 27%. So it has nearly doubled gold's return in the last, say, month and a half or so. Just tremendous. I think, the market's waking up to this. There are all kinds of anecdotes that I'm getting from people inside the sector that are very positive, very supportive. And I think this really has legs. The last item sort of for me was with gold. One of the best indicators of a true and sustained new bull market in gold, at least one indicator, is that it makes new all-time highs in all major currencies. And the last holdout up until about the end of March was the Swiss franc, and it broke out. I think it was on the 20th, on the evening of the 20th. It broke out, set a new all-time high. We had that across all major currencies. And that was when I felt, okay, this really is it now. Everything is moving up in tandem, and it is very bullish. We've had a strong move since then, but I think that the outlook remains very bullish. Oh, you've got to be right sometimes. So $28, I think if you just look back at the range over the last 3 years, we've really seen silver in a relatively broad range since it hit 30 in I think it was August of 2020. After that, the range got a little bit tighter. It did consolidate. We were talking about maybe 22 to 28, where it spent sort of a majority of the time. It did go below and it did go slightly above, but that was kind of the range. And so the first target was 26. That was easy. And then I felt 28. If you looked again at that consolidation range, that was the where a lot of the time was spent as a maximum. It was within the range, and that was the maximum of the range. And so I felt 28 made sense. Given that, as I said earlier, by the end of March, and a new bull market in gold had really kicked off, and I expected silver was going to follow, it made sense to me that we were going to see 28 before long. I thought second quarter at least this year. We're there much sooner. It was earlier in the month of April that we got there. It was earlier than I expected. And I still see $30 for the second half of this year. When obviously, the farther out you go, the harder it is. But I think $30 is pretty much a given in the second half, and perhaps even above that. A few dollars beyond that would not surprise me, given how things are going. It's impressive. There's a lot of real serious buying. It's not just especially in silver, it's not just sort of, in fact, what's interesting and what I think gives more sort of credence, we're still really, despite these price advances, we're still really climbing a wall of worry. And a perfect, I think, anecdote I have, and I've heard this from a couple of sources, not just one, but that the bullion dealers are seeing, or at least until about a week ago, they were seeing twice as many sales back to them versus purchases. So despite these higher prices, really what it tells us that despite these higher prices, twice as many people are selling back to bullion dealers than are buying. So this is part of the wall of worry. It means that we're much closer to the beginning of a strong up leg than we are to the end. There's not as much conviction yet, and yet we're seeing these prices. So I think with the bullion dealers, what it tells us is that some people are cashing in. They need the cash, or they've bought at similar prices, perhaps 2 or 3 years ago when we first hit those levels around would have been early or mid 2020, right after COVID, the panic started. And so I think people bought at those high prices. They're breaking even now in a nominal dollar sense, so they're cashing in and getting their money back because they've been so-called suffering, with the drawdowns ever since then. So wall of worry, I think that it's very bullish looking forward.
After sharing his price prediction for silver, now Peter talks about how industrial demand for silver is on the rise, with large-scale buyers such as manufacturers acquiring long-term futures contracts, seeking delivery, and investing heavily in silver-backed exchange-traded funds, ETFs. This growing interest in physical silver suggests a tightening market where supply might struggle to meet demand. The uptick in industrial buying signals a robust trend that could push silver prices higher. The bullish outlook for silver reflects its recent strong performance compared to gold, which has hit new all-time highs in major currencies. Silver's return has nearly doubled gold's over the past month and a half, prompting analysts like Peter Krauth, author of The Great Silver Bull, to predict silver prices reaching $28 for the first quarter of 2024 and $30 later in the year. These forecasts are grounded in the current market dynamics and the expectation that silver will follow gold's bullish trajectory. However, supply constraints add a layer of uncertainty to the outlook. The COMEX's registered silver reserves have dropped about 70% over the last 3 years, suggesting a potential shortage. With industrial users securing silver through futures contracts and ETFs, the market may be heading toward a significant supply crunch. Some experts, including Krauth, believe this could lead to silver prices surging, possibly even reaching $300 per ounce in a full-blown mania. While this forecast might seem ambitious, it aligns with historical trends and the ongoing industrial demand for silver.
I completely agree. And so, I had the sense going back months, in fact, and naturally for the last 2 years, 3 years, people have been asking, well, look, we've been in structural deficits, according to the Silver Institute, since 2021. So that's the last 3 years. They're expecting one this year. They're expecting for several more years. And so naturally, investors are saying, well, how can you have ongoing structural deficits and the price of silver is not running, it's not reacting? And we're talking about substantial deficits. If you add the last 3 years, we're at, I think it's something like 550 million. If you add this year, you're going to probably be at somewhere around 700 million cumulative over the last, say, 4 years, including this year. The last 3 years at 550 is more than half of an entire year's worth of silver supply. And that's if you include mine and recycling supply. So I had the sense that there had to have been some kind of other source of silver that especially industrial users were tapping. And because it was not putting additional pressure, let's say, on mining or on recycling, that it was also not putting upward pressure on the price. So if you can kind of draw down on stockpiles, then that would make sense. So I started doing some research and found details on what the inventories were, and these I call sort of secondary inventories because they just sort of sit there as when you have years of say structural surpluses, these inventories will accumulate on the futures exchanges. They'll find their way perhaps into ETFs, for example, silver ETFs. So these secondary supplies are just sort of sitting there. And if you look at the inventory charts of the LBMA, London, if you look at Shanghai, if you look at the COMEX, in the last 3 years, they've all been down about 40%. And if you look at their registered silver, which is the silver that's actually available for delivery, that's down about 70%. So when I saw, and there's no sort of perfect conclusive proof that this is what's happening, but you'd have to imagine that the industry facing, if the sector is facing these large deficits and the industry's getting their silver nonetheless somewhere and not pushing the price up, then they're drawing down on inventories. And to see these inventories shrink that much, we're talking about 800 to a billion ounces, perhaps in the last 3-4 years. The global, I have a really interesting chart that I put together. I looked at what had been happening at SLV. SLV is the world's largest silver ETF. It's the first, established in 2006, has about $10 billion of market cap. And you had the same data. In fact, over the last 3 years, inventories in the SLV are down about 40%. And what was really interesting was I looked at a price of a chart that shows concurrently the price of SLV and the amount of silver held by SLV. And until 2021, so you had about 15 years of history, you never saw a period where you had either a sideways price for the units or for silver, let's say, price for SLV units, and a considerable, notable, sustained drawdown in the silver held by SLV. Until 2021, that's when that actually started to happen for the first time. And that to me was quite the revelation. I thought, okay, this says to me that you've got large industrial users are buying long futures contracts. They're standing for delivery, taking delivery when they mature. They could certainly easily be buying large quantities of silver ETFs. And when you own enough units of a given ETF, you can ask for the physical metal in exchange. So they just need to go to the administrator and say, here, I have so many units. I want the physical silver in exchange. This is where I want it delivered. And away you go. They fill some forms, pay some fees, and pay for delivery, and they get their silver. So I believe that explains these drawdowns and the capping, so to speak, on the silver price. And I also think that this can only go on for so long, these inventories, because we're not getting more mine supply or recycling, nothing material. So these drawdowns can only go on so long till these inventories, are completely empty. And if based on the pace of the drawdowns, based on the pace of growth in demand, because supply is flat, I think we have 12 to 24 months before we run out of these secondary inventories. And what I find really interesting is that there was actually a report by TD Bank just recently released about a week or so ago, and they came to the same conclusion. They were saying they saw 12 to 24 months before these inventories are drawn down, and they basically felt that was the same thing that was happening. These large consumers are getting their silver there. So bullish for the outlook for sure, because if those exchanges and the ETFs do run out of silver, the silver price is going to have to go considerably higher. Well, I do think that is a factor. That's a great point. Yes, absolutely. And at considerably higher prices, I think you will see the strong hands holding physical silver will start to let it go a little bit. They will start to sell it back into the market, and I think that you do have to see considerably higher prices. You're probably going to have to see 40, 45, $50 before that starts to happen in a meaningful way. And even then, it depends on what are geopolitics like? What's the economy like? What is the environment like? The financial environment, the economic environment. So very hard to gauge. Recycling could perhaps start to become, I think, a little bit of a factor. Again, not worthwhile right now. Small amounts of silver go into millions of applications and electronics and for example, switches, on-off switches in electronics. If you're talking about a smartphone or an iPad or something like that, tiny amounts, not worth the cost of trying to recycle. At least not right now. If you get to $40, $50 an ounce silver, perhaps then that starts to become more interesting. As we know, solar is a huge source of demand for silver, and we can talk about that a little bit more. But that's also very, very difficult with the technology that we have right now to try to recycle. There's one company that I have read about, I believe it's a French company, that they feel they can recycle the majority of the silver in solar panels. But that's not going to get us that far. And how profitable is it is becomes another issue. And the demand is just through the roof. I mean, there was news in the last few days that India is launching the world's largest renewable energy park in Gujarat, and it's going to be 5 times the size of Paris. That's going to take a lot of silver. It's a solar park. So and it explains the fact that we've also recently gotten some data on Indian imports for silver for February. They were at a record 70.7 million ounces of silver. That's 64% of their annual imports last year in February alone. So it's going through the roof. India economically is doing relatively well. Massive population, of course, and it require and is moving towards, if anything, even if gradually moving towards renewable energy and consuming a lot of silver. Not to mention the silver that they consume personally for investment purposes, because they're big fans and they understand silver as much as they understand gold. So they're buying it personally, as I say, for investment purposes. So that's a very big market, and there are all kinds of forecasts. There's Baker Steel put some projections out. They looked at different critical metals going over the next 3 years. And silver, they think, will have a 20% deficit by 2027 over versus supply. They looked out to 2030, and they think that there's going to be at least a 20% deficit in silver versus the supply. These are huge numbers, when you're talking about billions of ounces. And they see a deficit. We've had deficits since 2021. They see them continuing and growing right through 2030. So the outlook for silver is tremendous. I think really people need to pay attention. If they don't have a position yet, look at it very carefully. Do your research, and you don't have to take positions through the riskiest methods or options. There are all kinds of options, but I think everyone should have at least some exposure to this market.
What do you think of Peter's price prediction? Will silver reach $30 in the second quarter of 2024? Are we starting a massive bull market, or will commodities stabilize for a couple months? Post in the comments section your price prediction for gold and silver. Share this video with a silver bug, and I see you on the other side.